Welcome back to Dinar Community Channel, your premier destination for urgent updates, critical financial developments, and behind-the-scenes insights on currency revaluations and global exchange movements. Today's report dives deep into what may be the most significant, yet least discussed, shift in the foreign currency redemption landscape to date. Confidential updates are surfacing quietly but forcefully, indicating that only a limited group of elite U.S. banks are gearing up to process redemptions for the Iraqi Dinar IQD. While millions remain fixated on a broad public announcement, the real developments are unfolding in private boardrooms and confidential banking circles. Insider leaks, from Tier 4B informants, internal staff memos, and banker training materials, suggest that the idea of walking into any neighborhood bank with your currency is no longer viable. The belief that any teller will simply exchange IQD, Vietnamese dong VND, or Zimbabwean dollar ZWL, is not only outdated, it may now be dangerously misleading. The truth is emerging. Currency exchanges will be highly exclusive, perhaps by appointment only, and backed by strict documentation and prior verification. Investors who fail to prepare could be locked out entirely, not just denied temporarily. In this special deep dive analysis, we'll uncover the reasons behind this strategic shift, which banks are stepping into this space, the regulatory forces driving these decisions, and what you need to do, right now, to be ready before your opportunity disappears. A quiet restructuring behind banking walls. Across major financial institutions like Wells Fargo Private Banking, JP Morgan Private Client Services, Chase Wealth Management, and Bank of America Global Investment, private banking teams have begun implementing controlled currency redemption systems. Not every location will participate, and not every client will qualify. The long-assumed scenario that your local bank branch can seamlessly exchange foreign notes is being dismantled. Instead, redemptions are being routed through centralized currency desks, accessible only through structured appointments. These are not walk-in friendly, and most are reportedly operating under non-disclosure agreements (NDAs). Why the shift in banking policy? This strategic move stems from compliance concerns and regulatory oversight. Under Basel III mandates, IMF liquidity frameworks, and enhanced AML anti-money laundering standards, banks are now forced to vet both the currency's source and the customer's financial standing before processing exchanges. This includes Know Your Customer (KYC) protocols and proof of IRS alignment. Because of the sheer number of speculative holders, particularly of IQD, banks are bracing for potential liability exposure. To mitigate this, private wealth teams are receiving specialized training under strict confidentiality. In some cases, entire branches have opted out of redemption services altogether. Behind the curtain, private rates and market activity. As of July 2025, we're witnessing unusual fluctuations on private tier trading screens and institutional FX desks. Though Iraq's central bank, CBI, continues to report a flat public rate, internal screens at Tier 1 banks appear to show quietly increasing back-end rates for the IQD. These signs suggest that preparations for a global rate shift may be underway. Similar movement is happening with the Vietnamese dong VND due to ongoing monetary alignments between the US and Southeast Asia. The ZWL, despite being long dismissed by economists, is now regaining interest, fueled by Zimbabwe's new unity government, economic policy reforms, and tentative cooperation with the IMF. Insiders believe the ZWL may soon be part of a digitally backed, commodity-based financial model, offering serious upside to early, well-positioned investors. Experts weigh in. Dr. Harold Stern, a respected currency analyst at the Sovereign Reserve Forum, offers a sharp reminder: no bank is required to process exotic currency exchanges. And if they do participate, it will likely be through private channels, not retail banking. Lisa Delgado, former Federal Reserve advisor, echoes this point: the Fed doesn't regulate or endorse public exotic currency exchanges. That's up to each individual bank, based on their internal legal guidance. Marcus Lane, compliance officer at Wealth Capital Group, stresses that without proper documentation, including origin verification and IRS identifiers, most exchanges will be denied or even reported as suspicious activity. Together, these voices reveal a tough truth: without proper planning, you may never be invited to redeem at all. The gatekeepers: paperwork and pre-approval. If you're serious about redeeming, your paperwork must be flawless. Banks will require government-issued ID, passport preferred, Proof of currency origin invoice, certificate, or official receipt. Tax identification number or social security number. Verified bank account documentation for any wire transfers. Currency declaration forms e.g., FinCEN 105. And if your redemption value exceeds $500,000, be prepared for additional KYC checks, structured payout schedules, possible NDAs or confidentiality agreements, internal background vetting. This is no longer a simple teller transaction. It's a high-stakes financial operation under tight scrutiny. Arriving unprepared could cost you the entire opportunity. The harsh reality of being unprepared. Picture this. You've spent years collecting millions of dinar, but when you visit your bank, the manager tells you bluntly, they do not handle exotic redemptions. You walk out empty-handed, shocked. This scenario is real. It's already happening. Most banks aren't authorized to handle high-value exchanges. They lack tier access and the back-end compliance infrastructure. Worse still, trying to redeem at an unqualified institution may trigger a suspicious activity report (SAR) to FinCEN, possibly blacklisting you or delaying any future redemptions while an investigation is conducted. So which banks are actually participating? While no bank has issued a public statement due to operational confidentiality, reliable reports from insiders and Tier 4B clients consistently point to the same names. Wells Fargo Private Banking, select urban locations only. Chase Private Client, JP Morgan Wealth Desks. HSBC US. International Wealth Division. Citibank Global Client Management, via referral only. PNC Private Bank, invitation-based access. Bank of America Trust and Wealth Services. Some regional credit unions and satellite banks are also being trained quietly under NDA to handle localized redemptions, but again, no walk-ins allowed. Access is by referral, appointment, or prior vetting. What comes next? A phased rollout. Many believe we're entering a phased implementation model. That means rather than a massive, sudden announcement, redemptions will likely start in key financial hubs such as New York, Chicago, Dallas, Atlanta, and Los Angeles, then gradually expand to regional branches with trained personnel. From a macroeconomic view, the IQD is likely to return to global platforms, possibly through a regional pilot or broader international adjustment. The VND may revalue in alignment with trade parity agreements, and the ZWL could be part of a new digital basket backed by Zimbabwe's vast mineral assets. But none of this matters if you aren't ready. Your 5-step action plan to avoid missing out. Here's what every investor should be doing. Now. 1. Visit your largest regional bank branch. Don't call customer service. Go in person and ask if they process IQD, VND, or ZWL. Document who you spoke with and their response. 2. Research private banking divisions near you. Look for terms like Premier, Private Client, Global Access, or Wealth Management. These are often redemption gatekeepers. 3. Gather all documentation, ID, currency receipts, proof of purchase, tax IDs, and bank account details. Keep these securely stored and ready for quick access. 4. Follow credible intel sources. Monitor CBI, IMF, US, Treasury, and insider-backed outlets like the Iraqi Dinar Info Channel. Ignore wild rumors, stick to facts. 5. Build relationships now. If you're not yet connected to a private banker, now's the time to get on their radar. Final word. Action beats assumption. We are no longer in the realm of casual speculation. Redemption is shaping up to be a compliance-heavy, invitation-based event. Those without preparation, documentation, and vetted banking access will be shut out. This is not about fear. It's about being informed and prepared. Redemption won't reward delay. It will reward discipline. Get ready. Be smart. And above all, move now before your window quietly disappears. Like and subscribe for more videos.